Hi everyone, and Happy New Year to you. This is Mish Schneider, Chief Strategist of MarketGauge.com. And we're going to do a quick video here on short-term trading opportunities in gold, oil, natural gas, and silver. Plus I want to add a little bit about sugar, since that might have made a big turnaround today and is a great inflationary clue. So if you're looking right here at this chart, this is the gold chart, this is February. So I guess that would be considered probably the most active in terms of open interest. And what's so interesting about gold is that it looked like after making new all-time high close back here, this was right before the holiday, that we've come off. And that's so typical, right, of what we've been talking about gold all year, or I should say not this year, but for the last few years, which is buy it when it looks terrible, sell it when it looks strong, and the day that changes, you know we've got something really solid to sink our teeth into. Well, so far that hasn't changed. But if we take a look at the short-term trading opportunities, what really strikes me is if we take the top of all these candles here, so it would be this one, almost near the high of this day, this one, kind of sort of that one, and now this one, and then these two doji days here, which by the way generally means a pause and traders trying to figure out. Really, basically now we have a good level of around, let's call it 2050. So we have to say that the bias would be positive above 2050 and would be negative under 2050. Now, on top of that, we also have the 50-day moving average here at 2045. So again, that would be another area. So between 2045 and 2050, we would get more optimistic, but it would have to be over 2050 for us to get really bullish at this point. And then on the flip side, you could see also we have great support at this low here. And this low, if you take a look, was at 2029. This low here was very close. This low here as well. And though we broke the low here on an intraday basis, we are closing actually back above it. So now we can say 2029, 2030 is our pivotal point. And below 2029 or 2030, then I would think that maybe gold really wants to go back down and test some lower levels. I would say the first one being about 2020, then we would have to look around 2010, and of course where the 200-day moving average is at 1995. Let's move on to silver. So now we switch to silver. This is March silver futures. And we really can kind of talk more range bound here. But from a short-term standpoint, you can see that $23 has been extremely powerful support. Even if we extend through it intraday, we come right back. And it was for a half a second here showing silver outperforming gold a little bit, but that didn't wind up lasting. I'd say the most concerning thing, of course, would be the fact that the 50-day moving average overhead is negative slope, and this is more neutral to negative slope. So we are kind of in a distribution phase, and the metals seem out of favor. But for how long? We've got higher lows if we go back 4 months ago to October. So for the near term right now, you could see that 2340 is really going to be a key area. And we get through 2340 as we're closing at about 2328. We'll be looking at, of course, the 200-day moving average 2360 as the next resistance. If we can't get through 2340 and we break down under 2320, I would say 23, maybe back down to 2280. But if we get anywhere near 2260, I will start being a buyer based on what I just mentioned to you about gold, which is if it looks terrible, it's time to buy. I mean, let's face it, we had growth stocks make a big move today. The interest rates still look like they may have topped out. We had the dollar down slightly, and the 30-year bonds actually showing a lower yield. All of this is eventually bullish. But the market actually rotated into other places in the U.S. today, leaving the metals behind. Well, another way to look at this overall, besides the levels I just gave you, is that if this is some kind of a bottoming formation, look at that wicked bar we had that day. Once we really get back over, and I would say really 2365, I would say that this starts to look not only like a double bottom, but we can actually really make a move up higher, again, along with those gold prices having to get back up over 2050 as well. So before the break, I had mentioned that oil looked very range bound to me, but looking at the chart, you can see at the February, $80 a barrel would probably be a nice breakout. So what do we've got going on thus far? I don't see anything too interesting in terms of levels, although clearly you can see 73 is good resistance. Here's your 50-day moving average at 72. And this actually entered a bear market today by going back under that 50-day moving average. So let's call that 72.12 our resistance. We get back through there, then this could be a false breakdown. If we cannot, then I think we have to be looking at where the most recent support has been of any substance. And if we take this low and the body of this candle low and the body of this candle low, that puts us at around 70.34. So at 70.34, if we can't get through 72.12, would probably be my bias to the downside here. I don't think we'll break down below 65, but if we get down underneath that area I was just mentioning to you at around that 70.35, then of course we'll be looking at our next major support level, which is at around 69, just under that. Again, on the flip side, over that 72.12, I would be encouraged that the move is over. If we step back and look at the entire formation, it's very sloppy. But again, if we don't break down under this low, we are making a series of higher lows. And here we have the February contract of natural gas. Now you do remember that I said really I wasn't going to be all that impressed until we took out 3, but that we did have, before I signed off with you for the holidays, that reversal low here. Wasn't a strong one though, so I wasn't really all that interested in this. I guess we could have said in hindsight that once this took out 260, this level here, or 260 to 270, it was the breakout, but I'm still thinking that $3 is key. We get through 3, and you could see a nice reversal today, then I would like this. This is going to close somewhere around 299. So let's say we get through that 3. Clearly, if you take a look to the left, you can see how much activity we had around that $3 level. We get through that. Then I think we have to look at our next resistance even before we get to that 200-day moving average, 309. And then from 309, if we can get through there, so it would be over 3 to 309, then of course the next area would be 315. If this is going to reverse itself, then we would have to look at a move back down, and I would say at this point 290 would be my near-term support. Holds 290, bias up. Breaks 290, then I think we may have to take another visit to 270, but more importantly, it would tell us that this move in natural gas is short-lived. And as promised, I have to end with sugar futures. This is the March contract, because I've had so many discussions with people about commodity super cycles, and people said, oh, sugar's over because it went down from 28 cents. And that was a pretty dramatic move back down to 20. But if you really go back in time, you'll see that we spent about a year consolidating between 15 cents and 20 cents. And once we took out that 20 was our trip to 28. And so if there's going to be any indication of another rise in sugar, which of course I also believe indicates early another rise in inflation with a lot of numbers coming out this week, you're going to see it here. So if we just take a look at the top of these candles and the top of today's candles, 21.75. And it's also on that 50-day moving average, which it has been below since November. So we get through 21.75. I would think even more than gold and silver and natural gas and even crude oil at this point, I would think that this would have a good reason to get back up to 22.30 first. Then we would see more resistance around 22.40. 45, and we get through back over 23, this thing is going to fly. My area was really 22.20. That's what I've been looking at on different charts. We get through this level. I think that basically means that sugar has permanently reversed. Where would it be wrong? Obviously, if it can't get through 21.75, and we start to see a move back down below 21.40. From 21.40, then we would be looking back at 21, and maybe the move would be over. But right now, to me, it seems like the momentum is to the upside. Okay, that's it for now. Thank you so much for watching. You all have a great day, and bye for now.